What are you avoiding like plague that you're just not touching, where valuations despite corrections haven't reached your comfort levels?
So see what one sector which we are very underweight on, and that's been there for the last many years, is not so much the valuation, it's just what we think of the earnings prospects. So this is all the global commodities. So basically
Okay.
the metals, especially steel. Because for us, China is the largest buyer. It's like accounts for nearly 50% of steel purchases. They're also the largest producer. And I think China is into a structural downturn in terms of the investment cycle. So China did very well for the last 20 years because the investment just kept going up and up. And I think they've reached a stage where the next at least 3 years, 5 years, you'll see a big downturn in the investment spend. So, when the largest buyer starts to slow down massively, then you want to be like very cautious on that sector. And that's what we've been tending to do. So metals is one space where we have been generally quite negative on, and we don't have too much exposure both in the small cap and large cap. So that's something we've been avoiding totally. The other one which we've been avoiding to a large extent is because of valuation has been the consumer staple space. That it just is too expensive for the sort of growth which it gives us. Great quality companies, but then at that price we've not found it very attractive.
Yes.
And so there, there's a bit of cyclical element because with consumer demand probably picking up after a decent monsoon, you could see some pickup in the business cycle over there. But for us, there are a lot of cheaper stuff you can get in the consumer discretionary, which would also gain from an improvement in the consumer cycle. So I would say the consumer staples are another space we've generally been avoiding.